Good morning, guys. Today, I think few people are not going to attend the session. They have texted me in personal. So I think we can start our session. Anyways, I'm going to provide the recorded sessions to them. So let me share my screen. Okay. So our today's topic, which we are going to start, is general business credit. And few of the people from the exam point of view think that this topic is most important, but it's not like that. Like in the part one, the credit topics is important, but in part two, not all the business credits will be asked in exam. Only there are few important credits which I will let you know once we start one by one with all the credits. Okay. So for general business credit, there is a normal form which will be used when we are taking any of the credits during any of the tax year. That is form number 3800. Okay. So I'll show you how that form looks like. 3800. Here it is. Okay. So actually, when you prepare the return in the tax software, you just need to enter the amount of eligible credits, and then automatically the software will apply it to your tax liability. Okay, so we are going to understand each and every of the type of credits, and here on the form 3800, the total amount of eligible credit will be shown on the box 1, and then there will be some calculation. From the exam point of view, this calculation is not been asked, and actually in practical life also, all this calculation is done by software only. So you don't have to understand that how it is going to apply based on your income. There are some percentage which will be applicable. Okay, so let's see first. So general business credit. First of all, what is credits? Credits are something which reduce your tax liability. Okay, so there is a difference between the deductions and the credits. Deduction is nothing like those are the expenses which you can deduct from your income. But credits are what? Once you identify your net income, on that you are going to pay some tax, right? So that tax portion is called your tax liability. Once you identify your tax liability portion, the amount of credit will be applied on that tax liability. Okay. So in individual taxation, there are many credits, and in that few credits are refundable, few are non-refundable, like that bifurcation is given. But over here, whatever credits which we are going to understand today, all the credits are a non-refundable credit. Okay, all are non-refundable credits. So let's see. First of all, whatever credit which you are going to get, we have a list over here. We'll go through it. That reduces the tax liability. Okay, and it cannot reduce the tax liability below this amount. So whatever amount you're reducing as a credit, and you receive the amount of payment. So here is the tax liability. You'll reduce the amount of credit which you can avail, and then you come to a figure after reducing the credits. So this amount which you are getting cannot be less than two things. First is tentative minimum tax. Just like in India, we have AMT, right? Over there also we have AMT, alternate minimum tax. That's a tentative tax which you have to pay on your income. Okay, so tentative minimum tax, there is a totally different chapter for this topic. We'll learn it, how much is the percentage and everything. So tentative minimum tax, or 25% of your regular tax. So whatever is this your tax liability, okay, take 25% of it. or take the tentative minimum tax, whichever is greater. Below this amount, the tax liability cannot be reduced. Means maximum credit. Can I say that maximum credit which you can avail is limited up to greater of this? Like you cannot reduce the remaining amount over and above this. Got it, guys? Any confusion in this? It's simple. Like how much is the maximum credit you can avail? The remaining figure which you are getting after reducing the credit, this amount should not be less than the greater of this two. Okay, means what? At least whatever is your minimum tax, at least you have to pay that, or at least 25% of your current tax liability you have to pay that, whichever is greater. Okay, so let's start with the general business credits one by one. But before going to that, this credit can be carried back to 1 year. So see, you can amend your tax returns for the previous 3 years. Okay, so you can carry back your credit. If in the current year you have incurred any of the expense listed below, then you can carry back your credit for 1 year. And if you want to carry it forward, right? So see, here the credit is limited. This credit can only be taken, which will limit it to this calculation, that is AMT, tentative minimum tax, or 25%. So what about the remaining credit? So remaining credit can be carried back for 1 year, or it can be carried forward for 20 years. Okay. So let's start with the credits in general business credit. So what are the credits? See, all the credits are not important. Whatever I will be saying you, whatever I will be marking over here as a IMP or A category, that are most important and that are actually used in practical life also. Okay. So first one is alternate fuel vehicle refueling property credit. Okay, means what? If you have incurred any cost for a qualified fuel vehicle refueling property which you are placing in service in the business in the current tax year. Okay, so alternate fuel vehicle means what? There is a proper definition which is provided by the IRS. If it falls under the definition, that if it's an alternate fuel vehicle and if you're using that vehicle in your business, then you can take the credit of whatever amount you have paid to purchase that vehicle and used it in the business. Okay, this you are not going to see anywhere in the practical life or in the exam. So I'll mark it as a C category. Just remember one thing, if in case you come across any of this kind of vehicle, so what happens now? Whenever you start filing the tax return or preparing the tax return, if in that particular tax year the client has purchased any asset, any vehicle specifically, what you will do, you will just take the model number, year, and search it on the Google that this vehicle is which type, right? And as per the IRS list, just identify whether it falls under this category or not. If it falls, then you can take the credit by filing form number 3800 of whole cost. Whatever is the cost of that vehicle, you can take that as a credit. So that is alternate fuel vehicle refueling property credit. Okay. Next one is alternate motor vehicle credit. So this is important from the exam point of view also, and in the practical life also. You will see this credit is usually taken by many of the taxpayers if they are purchasing a motor vehicle that is used in business. Okay, and that falls under the alternate motor vehicle. Like if it's a new vehicle which is purchased, and it can be either it can be either worked through fuel or through electric vehicle. Okay, this EV is currently added in 2022 tax year. Initially, it was just a fuel vehicle. If you are purchasing any motor vehicle, any XYZ vehicle, then you can take a alternate motor vehicle credit if it's used in your business. Okay. Now this limit, just remember this overall limit you need to apply in all the list which we are going through right now. Okay, so whatever is your cost of that particular vehicle, compare it with this amount, and based on that you can take alternate motor vehicle credit. Okay, any new vehicle which you are purchasing qualified fuel cell means if it's working through fuel, or a plug-in electric vehicle means EV or fuel, both, for both you can take a credit. Okay, now remember one thing, this is deemed that all these expenses which you are incurring should be a business expenses. It should not be a personal vehicle. If you're purchasing a personal vehicle, like using it for personal purpose, you can't take that credit in your business. Okay, so it should be for business use. Right? This is the which are marked in green, important. But remember one thing, in India, still there are a few, manufacturing units. They used to produce the diesel or any fuel by using a biomass. And that diesel is being used in that manufacturing unit itself. So over there also, if you are producing a biofuel, like using a biomass, like the waste of the cows and buffaloes, and using that waste, if they are producing the biomass, and that biomass is used to produce the diesel, like fuel which is being used in the manufacturing unit. Okay, so they can take whatever expenses they are incurring, right? And see, whatever biofuel they are producing now, that can be sold in the market, then only they can get the credit for this biofuel producer credit. Okay, so whoever is producing the biofuel using the biomass, they can take the credit. Okay, now the what amount of credit they can get, whatever amount they are earning from selling this biofuel, the whole amount they can take as a credit. Okay, next is biodiesel, renewable diesel fuel credit. This is the same thing by using the biomass. This is just producing any fuel, or this is if you are producing a biodiesel and it is, this fuel is sold or used in business. Okay, then you can take these credit in your business. Again, this is a C category. It's not that important and very rare clients. See, if you're working on a client and that are very large clients, okay, they are a big manufacturing units or a very big clients having their own facilities like manufacturing facility or units, only in that case you can see these two expenses which they are incurring to, for the production of this biofuel. Okay, so in practical life you will see rarely. From exam point of view, this is not at all relevant. Okay, next is carbon oxide sequestration credit. Means what? If you're doing some production and there are carbon oxide gases or some disposal which is harmful actually, and if you are disposing it in a secure geological storage, okay, or what you can do, that waste is again used as a natural gas recovery project, or it can be used as a natural gas recovery project. Okay, means you are protecting the environment by not disposing those harmful waste into environment. Okay, so whatever expenses you are incurring for disposing it, okay, that whole amount you can take as a credit. Okay, so again that's a C category. Next one is A category credit. It's a credit on employer social security and medical taxes paid on certain employee tips. Now, can anyone tell me what is employee tips? I think I have already told you guys about the employee tips, right? The taxes which the employer will be paying on the tips, or anyone? Do you guys remember or not this topic? If employee received tips during the during that business during the whole month, if the tips are received for less than $20, then what the employee will have to do? Employee will have to, if they are receiving for more than $20, the employee will have to report the tip income to the employer. And what the employer will do? Employer will have to pay social security and Medicare tax on the tips. Employer part he will have to pay. Okay. Now, what this credit is talking about, if the employer has paid the social security, Medicare taxes on the employee tips, then he can get the credit for whatever he has paid for 50%, right? The employer's portion is always 50%, and 50% they will be paid by the employee. So employee part, we are not going to consider, just the employer portion of whatever social security and Medicare the employer is paying, that credit will be allowed, and it will be called as credit for employer social security and Medicare taxes paid on the employee tips. Okay, so this for the exam purpose you can consider as A category. Those who have joined late, and from the exam purpose I'm just marking here A category, which will be like from which maybe some question can be asked, and C category you can totally ignore it. Like when I appeared in my exams, I totally skipped this whole topic, this whole general business credit. I totally skipped it because I know, like, wasting almost 4 to 5 hours in the topic, and the weightage of that topic is hardly 1 or 2 questions, then there's no point in wasting that much time. So that's why I've just shortlisted some important topics. I would recommend not to skip it, just go through the A category topics properly. Okay. Next is employer differential wage payment. Now, what is this? This also you can consider A category. Whenever the employer is paying wages to particular employees, and that is in some different area, like that employer is a small business and he has created some incentive plans that so that the employee can perform the services in some outskirt areas of the states, right? Some employees, what they do, if they are employed at some location which is at a like very far location than they from their house, then they skip to go to to that particular employer, and they shift the jobs. But some employers, what they do, they will provide a higher wages, that if you're working from this location, I'm going to provide you a higher wages. So employer differential wages, if it is paid by the small business, okay, with an incentive to continue to pay wages to the employee performing services on active duty in uniform services of the United States, and for the period of 30 days. For more than 30 days, if you're constantly paying them, and if they're performing the services from a different locations, or the differential wages, see the name itself says, if they are getting the higher wages for the same category of work, if they do the same thing within the city or within the state, but outside the state, if you want to promote them to go there and work, so, and if you're paying them a higher amount, okay, so whatever excess wages you are paying now, the employer can get the credit for excess wages. Okay, basically he is going to deduct the expenses of whole, let's say he's paying the wages of $120, and actually if normal wage rate is say $100, so he's paying $20 extra. So this $120 the employer is going to deduct from the deduction, plus he's going to get a $20 of credit. Got it? But again, just to remind you, this $20 should be limited and should fall under this category only. Like maximum credit which will be allowed is tentative minimum tax or 25% of regular tax in excess of 25,000. See here, actually, I missed this. Here, the tax liability, whatever, let's say 50,000 is the tax liability. So what is in the excess of 50,000? It's 25,000, right? So you will take 25,000 into 25% and take the tentative minimum tax, whichever is greater. So only this is the minimum amount you have to pay at the time of paying the tax and filing the tax return. Okay, over and above that will be not allowed. So here you can see this employer differential wage payment. Whatever is the excess wages which you are paying, you can get the credit for that. Okay, only the condition is it should be paid for more than 30 days. It should not like that the employee worked at that location for just 15 days and then he was transferred to another location. So that for that particular employee, the credit will not be allowed. Okay. Next is, before going to next, any question from your side, guys? No questions?
No questions.
Okay, you guys are understanding, right? These are the credits. Like in India also we have same, not same type of, but some deductions and credits which we use in India. But same over there, like there are some credits like they are more inclined towards, you know, employment, the wages side, whatever employer employee relations are there and whatever employer is spending for the benefit of employee, they support the employers. And that's why you will see over there are so many benefits which will be provided to the employee by from the employer side, like they will provide health insurance or any other expenses which can facilitate the the day-to-day working of the employee. Okay, so over there you can see a lot of deductions will be based on the employer. Lot of benefits will be provided to the employees when they are working in the particular organization. Okay, so next is, if the employer is providing child care facilities, see what happens there if the taxpayer and the spouse, husband and wife, both are working, and if they have a child, so what they do usually, they'll keep their child at some childcare facility and then go to the work, right? So what the employer can provide the childcare facility on their own premises. Okay, let's say your office is of eight floors. On first floor you have a childcare facility, and on the fourth or fifth floor you are working, so you are there in the same place along with your child, but that childcare facility is totally provided by the employer. Or for example, maybe the location may be at some other place, but the expense of that childcare facility is incurred by the employer. Okay, so it's a benefit which is provided by the employer. So employers must get some deduction, some benefit for that. So that's why whatever expense the employer is incurring, he can take a credit which will be equal to 25% of your qualified childcare facility expense. Let's say employer is providing like $1,000 to that childcare facility. Okay, so 1,000 into 25% plus 10% of qualified childcare resources. Let's say when the child is going at the childcare facility, the fixed fees the employer is paying is $1,000 plus along with that he's also paying extra for their lunch and for some books, for some toys and everything. So that extra expenses, extra resources along with that childcare facility which the employer is providing, the whole expense multiply by 10%. So for whatever expense is incurring plus the fixed fees is paying to the facility, that you can take a credit 25% of the fixed fees and 10% of the extra resources which you are providing. And this will be the whole year. During the whole year, you will take the expense multiplied by 25% and 10%. Whatever is the amount, that will be limited to 150,000 per year. So it's like overall maximum you can get 150,000, and then you should check the actual expense. Whatever is the actual expense, take 25% and 10%, and that credit will be allowed to the employer. And this is, in exam, this is most important. I can write here as double A. One question, only one or two question is there in the exam from this topic, and this is the one of the topic from which the question might ask. And the other is a disability credit, which we'll learn in upcoming like topics. Okay, next one is credit for increasing research activity. Okay, so from practical point of view, this is important. Whenever there is a new startup, okay, if you get a client, if you're working on a client and he's having a new startup or a new business, so there will be 100% possibility that he will be incurring research activities, and the clients are usually not aware about this credit. Few of the clients, like they are already aware. Like, see, in India, what happens? All the people, all the taxpayers over here, they don't have at all the knowledge of all the deductions and credit. They just provide all the documents to the tax preparer, and the tax preparer just apply whatever is the most beneficial for the client and provide it to them. They'll pay whatever tax they have to pay based on that calculation. Over there, what happens? If you have a US client, and if you forgot to apply this credit, and if they are aware about this credit, they will directly pay you. Like, what happened? The process is, once you prepare the tax return is prepared, then it is provided to the client for review in the form of draft copy. Okay, once they review the draft copy, form number 8879 is filed. Okay, what is 8879? It's just the e-filing authorization. The client will provide e-filing authorization. Like, he'll say, okay, this all the figures are perfect, all are good to me. So you can just e-file the return. Okay, but before signing this, he'll just review the whole return. And if you forgot to take any credit which he is aware about, then he will ask you to maybe apply the credit or just do the research and check whether it is applicable or not. So at that time, you should be properly aware about each and every credits. Okay, that's why whatever category I'm like here mentioning, just go through it. And remember one thing, in practical life, these credits may change due to inflation. Like, in each year, there might be some changes, not a major change, because this were the same credits which are been there in 2021 tax year. These are the same in 2022 as well. Wherever there is a change, I'll let you know. But remember one thing, just go through each and every credit. This will be helpful in a practical life as well. Okay. So research, if you are increasing some research activity, so whatever excess amount of research you are doing on a particular, in a particular business. So let's say I hired one of the person, like I am in India, but I want to research on the potential market, which I can cover from maybe United States or maybe UK or maybe any other country. Okay. So whatever expense which I'm incurring, like the payroll which I'm paying to that particular person whom I have hired, that excess amount, take that amount and just do the 20%. Okay. That much credit you will be allowed. So research activity credit calculation is very simple. Whatever is your excess amount, first you have to identify whatever expense that client has incurred. Is it really the eligible for research activities or not? Okay, and just take the 20% of that expense and take the credit. Okay, next is credit for small employer health insurance premium. This is also, I'll mark it as double A. This can be asked in the question in the exam. Whatever employer has taken the insurance for their employees. Okay, so it might happen the employer is paying the whole amount of insurance, or it might also happen the employer is paying the 80% of the premium and 20% is paid by the employee. So whatever employer is paying, that 80% portion, take 50% of the premium which is paid by him. Okay, let's say the premium amount is 1,000, but the employer is paying 800 and the employee is paying $200. So 800 into 50% is $400. This much premium will be allowed as a credit. Okay, now here is one exclusion. If, let's say, if the employer is paying $400, means he is just paying 40% of premium. Okay, then in that case, this credit will not be allowed. Okay, got it, guys? People get confused in this topic because the percentage is applied twice, and usually people make mistake in the question in the exam. So understand this carefully. Again, I'm going to tell you, whatever is the premium amount, right? Premium expense, whatever is been incurred, you will have to check how much percentage the employer is paying and how much percentage the employee is paying. So whatever percentage the employer is paying, if it is less than 50%, then the credit will not be allowed. And if it's more than 50%, right? So take whatever part the employer is paying, multiply it by 50%, and that much amount will be allowed as a credit. But there are two conditions which employer will have to fulfill. Employer should have less than 25 FTE. FTE means full-time employees. Okay, they should be less than 25 full-time employees in their organization. Then only they will be called a small employer health insurance premium credit. Okay, small employer is nothing but who are having less than 25 FTE, and all the full-time employees are having annual wages, average annual wages of less than 58,000. Okay, now here it's annual average. What do you mean by average? Whatever amounts you have paid in all the 12 months, take the total and divide it by 12 months. Okay, so you are going to get a per month. But remember one thing, sometimes what happens in the mid of the year, like let's say in the June or maybe in the July, the employee gets increment. So you can't say that in first month his salary was 1,000 and in the like 8th month his salary is 5,000. I'll just take 1,000 and multiply it by 12. No, you have to take the total of all the 12 months and it should be up to 58,000 only, not more than that. If it's more than that, then that particular employee is not called FTE. Like he will not be falling under the eligibility of credit. Okay, whatever insurance the employer has paid, you are not going to get the credit for that particular employee if his annual average wages are more than 58,000. Got it, guys? Any question in this? No questions? Okay. Next is same like health insurance. If the small employer, again the small employer means FTE less than 25 and 58, this will apply. If they are providing a pension plan startup, okay, so initially they have just started providing the pension plan to their employees. Okay, so this credit, only this credit, there is a year of limitation. Here what they'll say, for first 3 years you can get this credit. Okay, so whatever you have just started providing the pension plan to the employees, so first 3 years you can get the credit, and maximum is 5,000 per year. Okay, so this is a category. This might be asked whenever the small employer is providing the pension plan. So whatever expense the employer has incurred for establishing and administering the plan or to educate the employees. Some employees are not aware about the pension plans. What they say, like, why you're putting the amount in this plan instead of give it to us directly only. But no, you need to educate them that why they are putting this in the pension plan, so that after their retirement, this particular pension plan can be used by them only. So that's why, to educate, to administer the whole plan, like whatever is the cost they are incurring, you can get a credit of up to 50% of startup cost. Let's say your startup cost is 20,000, right? You have incurred 20,000 for developing the whole plan. This 20,000 you can take 50%. That comes to 10,000. But this 10,000 is limited to 5,000 per year. So 5,000 you can take in first year, and then again 5,000 you can take in the second year. So now there is one confusion over here which IRS has not yet clarified, and it's a major topic of discussion. Like, this expense which you are incurring should be for first year only, or for the first, second, and third, all the 3 years. And based on that, you will be getting deduction for first 3 years. Okay, there is no clarification whether the expense should be one-time expense in the first year, or it should be the expense in all the 3 years. If you Google it out, or if you check the IRS publications and everything, still there is no judgment mentioned for this topic, like whether it should be for first or all the 3 years. In exam, whenever they ask you, just take whatever expense they have provided, take the 50% of it, and check that whether it's within like less than 5,000 or not. If not, you can answer it like 5,000 for the first year, and the rest 5,000 you can take it in the next year. Got it, guys? Next is, and this is most important, there will be one question from this topic: disabled excess credit. What happens, right? If the employer is having any disabled employee at their organization, maybe handicapped, or maybe due to any reason the employee is disabled, but still he is having proper skills and he's working in that organization, an employer is providing that particular person with the facilities. Let's say that particular person is handicapped. So there are some renovations made in the organization which will help him to move from one place to another, right? So that expense which are incurred by the employer and which is benefiting the disabled person, like it's facilitating him in the day-to-day working, right? So whatever expense the employer has incurred to provide the access to the disabled person, for that 50% of first 10,000 will be allowed. Okay, so let's say you have incurred expense of only 2,000. So 2,000 into 50%, $1,000 will be allowed as a credit, disability excess credit. But if you have incurred expense of 15,000, you will be allowed a credit of only 5,000, because it's first 10,000 only. The rest, there's no credit on the rest expense. So what they are saying, you should incur expense only within 10,000 of the limit, not more than that. You will anyways going to get 5,000 as a credit. Okay, guys, this is most important from exam point of view. Next is distilled spirit credits. Means what? Those who provide the distillers for what we say, or the spirits will be used in some chemicals or some manufacturing units. So those who provide these facilities, or if they are importing it, then also it will be allowed. Whatever expense you are incurring as a distillers and importing the distilled spirits will be eligible for the distilled spirit credit. This is a C category, like you will never see this type of credit anywhere in the tax return or in the exam also. Next is empowerment zone employment credit. This is important. Why? Because this credit will be like available till 2025 tax year. So there are higher chances that they can ask questions on this topic in 2022 or maybe 23 tax year or 24. So till 2025 only this credit is available. If the employer is employing the people in the empowerment zone, just like in India, there are some special economic zone, right? Employment economic zone, EEZ, SEZ, this type of zones are there where they get some different credits, right? Same way over there, there are some empowerment zones which are listed by the government. If you are employing some people from there only, like let's say I have a manufacturing facility in particular state and that is an empowerment zone, means uh, that particular zone is declared as empowerment zone, and in that manufacturing facilities I'm hiring the employees, the labor from that state only. Okay, I'm not hiring from outside, from other states, and then asking them to come over there. I'll provide the living facilities and you'll work at my manufacturing facility. Just like Tata Nano, right? They employees, the labors were hired from that particular state, like particular area only. Same way, if you're employing from that particular area and your manufacturing facility is in empowerment zone, then you can take a credit of 20% of whatever wages you are paying to them. Okay. And this wages, this up to 15,000 is the amount of wages. Okay. The qualified wages should be up to 15,000. Whatever is the amount you're paying, take directly 20% as a credit for empowerment, for employing the people from the empowerment zone. Got it, guys? This is very simple. See, credits topic is nothing. There is nothing logic in this topic. You just have to mug up the limits and amounts, and whatever A category I'm marking now, you have to remember that limits. In exam, they are not going to provide you this percentage or this limits. But in other topics, like when we do the alternate minimum tax and those, there are some phase out limits. Wherever there are phase out limits, when we learn those topics, those phase out limit, if you don't remember, that's fine. But for credits, whatever I'm marking as E category, that are most important. Okay. Next is energy efficient home credit. This is important from the practical point of view. If we talk about in the practical life, you'll see many people are eligible for energy efficient home credit. Like contractors, specifically those who are in the business of contracting the home, like building the home and just selling it. Okay. So the contractors who are selling the home, and if that home is considered as a eligible energy efficient home, then you can get the credit. Now, there are some inspections, like once you construct the home, there are some inspection carried out by various organizations. They'll provide you a report. So when you receive from the client side, when you receive that they are eligible for energy efficient, you can just check the report that whether that particular home is meeting at least 50% of energy efficient standard or not. If yes, then you can take 2,000 for each home you are selling. Or let's say Mr. A is a contractor. Okay, he has built 5 houses, and out of all the 5 houses, like 4 are fulfilling this more than 50% energy efficient house. Then you can take $2,000 into 4 houses. So you can take 8,000 as a energy efficient credit. Okay, and one home is fulfilling just, let's say, 40% or maybe 30%. So for this, the credit will be reduced to $1,000. So $1,000 is for those who meet 30% energy efficient standard. Okay, guys. This was about energy efficient home credit, which are usually used by the contractors. Because see, remember one thing. Right now, we are learning about general business credit, and contractors are someone who are into the business of selling the home. That's why this credit we are learning right now. Next, the one more credit some people might have heard is if you are, purchasing some solar energy efficient some appliances for your house. So that is also called as energy credit, but that is from the point of view of individuals. Okay, right now we are learning about the businesses. So whatever business related energy efficiency thing which you are incurring, and that particular home is being sold further, for that you can take this. And the person who is purchasing the energy efficient home, for them there is no credit. But if they are installing some appliances which are which reduces the energy cost, like some solar panels they have installed in their house. Okay, so like energy efficient appliances if they have used in their house, so for that whatever is the cost, they'll get the whole credit. Okay, that you'll learn when we start with the individuals, but right now for the business purpose, just remember this contractors example. Okay, next is Indian employment credit. See, it's like whenever they are employing some American Indian, it's not like if you are working for a CPA firm, this is not called as Indian employment. If you are an American Indian, like if you have totally transferred over there, living over there, and working for any organization, and if that employer is paying you wages, okay, along with the wages, that employer is also incurring health insurance cost for you. So whatever is the total of this, take 20% and you will get a credit on Indian employment as an Indian employment credit. Okay, guys, this is very rare. You will not see this anywhere, maybe in the tax return or maybe in the exam. So I'll just mark it as C category. Okay, this you can consider A category. Next is investment credit. From this, there can be one MCQ, like they'll provide you the list. These are the examples of investment credits. So whenever you are investing into particular project, you can get the credit of whatever investment you have made. But that project should be from this 5 category only. Okay. From this out of this 5, if you are investing in any other XYZ business or project, you're not going to get any investment credit. So in exam, there will be one question, like they'll provide you list of investment credits and they will ask you which of the following is not an investment credit. So you'll have to remember rehabilitation credit, energy credit, okay, qualifying advanced coal project. So these are the project's name. Okay, you don't have to understand the logic why this project is there. It's just like in India we have some bonds, some government bonds, the saving certificates are there, government saving certificates are there. Some this type of projects are established over there, right? Rehabilitation credit, rehabilitation, there's project which is established for rehabilitation, energy related project, qualifying advanced coal project. Then there's a gasification project, qualified advanced energy project. So here the word qualified which is mentioned, just remember this thing. If they are backed up by the government, like they should be mentioned in the list by the government. So okay, this project is a government, just in India we have government bonds and private sector bonds, right? Same way, only the government bonds will be eligible. Same like that, qualifying advanced coal project means if they are run by a particular government or maybe a qualified organization which is recognized by government. So only if you're investing in this, then they will be considered as a qualifying expense, and those expense will be allowed as an investment credit. There can be only one theoretical question that will be one liner. Okay, so just remember the credit names over here. Investment credits, there are 5 investment credits. Okay, Rehabilitation energy, coal, gas, and again advanced energy. So you can remember like this. Rehabilitation is a separate thing which you can remember. Then there's a energy and energy. Then there's a coal and gasification. Okay, coal, gasification, energy, and rehabilitation. All right. Next one is most important. This you will see in exam. There will be one question, maybe one question. See, there are different sets in the exam when you appear in the exam. So from general business credit, hardly there will be two questions, two or one question. So whatever I'm marking as double A category, from that there can be a question in your paper. Maybe from disability, if it's not, then it can be from work opportunity credit or maybe any other topic which we have marked as a most important one. Okay. So work opportunity credit is something which the employer will get in the first or the second year only. First and the second year. How much credit the particular employer is going to get? It's qualified wages you have to check, right? And this wages can be maximum 6,000, not more than that. See, the name itself says work opportunity credit. The employer is providing the opportunity to the unemployed people. Okay, so if they are being hired and they are getting the wages of up to 6,000 only, then only they will be falling under this credit. If anyways you are going to provide them a wages of more than 6,000, 8,000, 9,000, then they are not falling under the targeted group. Here the word which we'll be using is targeted group. If the employee falls under the targeted group, means we'll see the name. What do you mean by targeted group? Means they are not getting the job anywhere, or if they are unemployed, means they are being categorized as a targeted group. If they fall under the category of targeted group and if they are receiving the qualified wages of up to 6,000, the employer can take a credit for whatever wages they are paying to them. Now let's see, there is a calculation. The whole credit is not allowed. You have a bifurcation over here for first year. Okay, the person, if you're hiring any person for the first year of his hiring, see here also there is a confusion whether this first year is of the employment, like employee or employer. Employer has just started the business and that is first year, or the employee is getting hired and that is his first year and that you need to take 25%. Here also this is uncleared by the IRS law. Okay, so take the wages, take 25%. If that particular employee has worked for more than 120 hours and up to 400 hours for whole year. Okay. Next is, if that particular employee has worked for more than 400 hours, then you can take 40% of his qualified wages. But the qualified wages should be up to maximum 6,000, not more than that. Okay, for the first year, you can take either 25% or 40%. Next is, for the next, like the second year, this number of hours will not matter. See why this matters in the first year? Because it might happen that some employees are employed in the mid of the year, at the ending of the year. So if they have worked for more than 120 hours, then only they will be eligible. If they have worked for less than 120 hours, then this credit, this 25% will not be applied, because here, as the law suggests, or the law says, more than 120 hours up to 400 hours. And if it's more than 400, then you can take off 40% of credit. And next year, anyways, if you are employed for the first year, the next year you are going to have a 50% of the qualified wages. The hours criteria will not be seen. You'll just take directly 50% of qualified wages. So first and second year, only you are going to get this credit, not more than that. Now let's see what is a targeted group. Targeted group people are someone who are going to receive a long-term unemployment amount. Okay, so what do you mean by that? The government used to pay the person who are unemployed. So if they are going to receive an employment amount for a very long term, means they are not getting any employment, and if the government is paying them some amount for a very long term, then they are considered as a targeted group. Okay, long term family assistance receipt. This is again the similar as a unemployment program, but this is for the whole family. Next is receipt of temporary assistance for needy families. Okay, if you are providing, if you are receiving a temporary assistance amount from maybe government or any of the other organization for a needy family, then you will be considered as a targeted group. Qualified veteran, qualified ex-felon, and designated community resident. So these three people, if you fall under any of this category, or maybe you're receiving any amount for unemployment or for family assistance or for any needy, needy families, you're receiving any temporary amount, then you will be considered as a targeted group. Means what? Simply, I can say if you're unemployed, if you're not getting any job, and your day-to-day earnings are nothing but from this three things, right? So in that case, you will be considered as a targeted group. And if you are being hired by any of the employer, that employer can take this credit. Okay, so don't get confused. Employer is going to get the credit if they are paying the wages. Okay, that is work opportunity credit. Got it, guys? So this are only, there are few more credits. Those are one liner. I'll just send you the picture from the book. There are few more credits. Those who are having my book, they can just refer those one liner credits, and that are not that much important. And practical life also, those credits are not being used by any of the business entities. They are just there in the law. So if you incur anything from that, you can I can say take the credit, but you'll rarely see those type of credits. Also in exam, it's not relevant. Only remember this all important AA category topics and understand it, and only two question maximum I'm saying will be asked from this topic. Okay, so any question from you guys, will solve some questions which are important from the previous topics, and then we'll end the today's session. So any question before we move to the question and answers? No questions?
I have a question. Can you hear me?
Yes, I can hear you. Tell me.
Okay. This is not related to the general credits.
Which one you are talking about? Your voice was distorted.
Give me one. Okay, so I have a question. This is not related to general credits.
No, this is general credit
Can
only.
you hear me?
Yes, I can hear you.
Okay,
These are
but
general business only. You are not
yeah,
audible.
okay. जो मेरा question है वो थोड़ा लास्ट क्लास टॉपिक नहीं था कैश उसमें मेरा डाउट है, आपने बताया था कि आपका चाहे कैश आप can you hear me?
Yes, tell me.
ओके, सो आपने बताया था कि अगर आप कैश में रेंट पे करते हो, कैश अकाउंटिंग फॉलो करते हो या अक्रूवल अकाउंटिंग फॉलो करते हो, आपको रेंट मिलेगा उतने ही महीने का जितने महीने का आपका टैक्स ईयर होगा. मतलब अगर आप जन टू दिसंबर फॉलो कर रहे हो तो आप डिडक्शन सिर्फ इतने 12 महीने की मैक्सिमम ले सकते हो.
करेक्ट.
आउट ये मोर देन 1 ईयर से पे किया, चाहे आप कैश फॉलो करो चाहे अप्रूवल, आप सिर्फ 12 मंथ्स का ही डिडक्शन ले सकते हो. लेकिन मेरा क्वेश्चन ये है कि चलो ठीक है, मैं डिडक्शन तो नहीं ले सकता हूँ, लेकिन अगर मैंने 12 मंथ से ज्यादा पे किया है, तो जिस बंदे को मैंने ज्यादा पे किया, क्या वो मोर देन 12 मंथ्स की से ज्यादा की इनकम शो करेगा अपने बुक्स ऑफ अकाउंट्स में?
Yes. In that case, what will happen whenever you're receiving the rent income, there are two categories. One is regular rent and one is advance receipt. Now, if this advance receipt is non-refundable, okay, so you're in future, you're not going to refund this income. He will have to show it in the renting. But let's say along with the rent, you are receiving some deposit, and this deposit is a refundable. If it is refundable, you are not going to show it as a income. Okay, so if you are expensing it, you will have to take only 12 months of expense. But the person who is receiving more than 12 months of that income, he will have to include it. Now here check whether he is using cash method or accrual method. If he is using accrual method, then he will include it, right? If he is if he is in, I said it wrong. If he's using cash method, then he can use it, include it in his income. If he's using accrual method, that then he is not going to include it in current year. He will include it in next year. Okay. While receiving the income, you will see the concept of cash and accrual. But while paying the income, whether it's cash or paying the rental expense, whether it's cash or accrual, both the cases, only a maximum 12 months of expense will be allowed. Okay. Yeah. So yeah, it was a good question. Did anyone came across this question when they were learning? Like I'm not sure whether you guys are revising the topics or not, because so see, right now we are going in a proper pace, and you can easily schedule your exam at the end of August. And 24-25 August dates are available, I think. Like 2 days ago when I saw on the Prometrics, the dates were available for the ending of the August. So you have enough time. Till first week of July, we are going to complete our course for part 2. You have whole July month, whole August month you are having. And at the end of August, you can appear for exam. But if you're not revising on day-to-day basis, you will not have a confidence to appear in exam. Very few people are revising. I can see that, like, they're asking me doubts in the WhatsApp, in the personal. They're calling me for the doubts. So very few people are revising. I can see that. Okay. Any other question apart from Shivam? Akshay, you are having any question?
Yes, so can you please advise on that you have discussed on solar plan under the head of
Oh,
energy efficient home credit?
okay, this one. So here what happens, this is specifically for contractors. Currently, we are looking from the point of view of business. So if you are filing 1120 S Corp or 1065 return or 1120 C Corp return, then only this will be applicable. But let's say if you're filing a 1040 return, then in that case, you will have to see whether that particular individual has incurred any expense, okay, and which is saving the energy. Saving the energy means what? He has used some efficient ways to reduce the electricity expense, like solar panel he has installed, or he has purchased some appliances which will not utilize the electricity, like solar cooker is there, some solar related, like I'm not sure what are the solar equipments that they can take. Just one example I have in my mind, that is solar panels, if they are using to generate the electricity in the whole house. So whatever solar panel expense they have incurred, let's say 100,000, like 1 lakh they have incurred in installing that whole solar panel, and the price of the solar panel, they can take the whole 1 lakh as a credit. But remember one thing, when you enter the credit in the tax return, the tax software will do some calculation based on your income. That calculation is nothing but this. That calculation is this. Okay, minimum, whatever is the alternate minimum tax or 25%, that calculation will be done by software. And then when you check in the output form, you will see that how much maximum credit he can get. Okay, this is applicable. This credit limit will also be applicable in the individuals and also in the business. Okay, so this solar panel credit, which you're talking about, Akshay, which we usually see in the tax return, is related to 1040 taxes. Okay.
Okay.
Any other question, guys, from anyone else? Okay. So let's solve some questions so that it will be clear in your mind. Let's see who has remembered the credits. Anyways, I'm going to share this PDF. You can just make your notes and revise it on the same day only. That's why I'm not giving you time to write it in the class, because when you're writing it after the class, it will be anyway help you guys to revise the whole topic again. Okay, so let's start with the first one. There is an employer. He is providing some disability facilities at his organization, and for that particular employer, the gross receipts are 750,000, and he is having 10 full-time employees. He spent 15,000 in the eligible excess expenditure. So can anyone tell me this credit is related to which type of credit which we did, and how much he can get the credit?
Disability access credit.
Yes, disability excess credit. And how much was that?
I think employer can get maximum 5,000
Maximum
50
5,000.
and
But
50% of 10,000 first.
50% of first 10,000 of expense. Current situation, you can see he has expensed 15,000. So only for first 10,000, we can get 50%, that is maximum 5,000. So answer is 5,000. Okay. Now, there will be straight away questions like company has incurred a research expenditure and increase the research expenditure by 3,600. So what was the percentage of research expense credit? If you guys remember,
20%.
that is 20%. Is it 20 or 25, guys? Shivam? You guys can write in the chat box if you your mic is not working, or maybe. Are you sure it is 20%?
Yes.
Okay, so what is 3,600 into 20%?
720.
0.20. It's 720. Okay. Next question is, a partnership firm spent 100,000 on eligible excess expenditure. So instead of using the word disability, they can use this word also, eligible excess expenditure. So what is this? This is related to disability excess. Okay, they might confuse you and they just directly use eligible excess expenditure, and then they will mention it in the last line that that is used for a qualified for disabled persons. Okay, so you will have to remember this wordings. Excess expenditure is nothing but related to the this disability. Now they have spent 1 lakh. Even though they have spent 1 lakh, they'll just receive a credit of 5,000 because it is limited to 5,000. 10,000 into 50%. Okay, and then it doesn't matter what is their gross receipt, how much are the FT, full-time employee. See, you will get confused if the question in the exam is asked and provide these two details. You will say there was some criteria which includes like less than 25 FTs, and they must have less than 58,000, or they must have less than $6,000. So this all limits you have to remember. So guys, I request you, those who are going to appear in exam, prepare the chart for each and every credit and highlight the criteria, or else all the credits will be mixed up and you will not have a proper answer in the exam. Even though you are aware about what type of credit it is, you are not aware about the limits and eligibility criteria, you won't be able to answer. So here maximum is 10,000 again. These two criteria we are not going to see at all. It's a disability credit. There was no condition of FTs or the gross receipts or anything. Okay. Next is Mr. A started a simple plan. Simple plan is a retirement plan. Okay. So he took a retirement plan and which has been there in existence since 5 years for her employee, for his employee. Let's make it Mrs. A. For her employees and herself. Okay. So it cost her $400 in fees to administer the plan the first year. So first year she expensed $400. Now it is fifth year. How much credit can she take in the fifth year? Can anyone relate this topic with any of the credit?
It's for pension plan.
Pension plan.
Yes, pension plan startup. And if you remember, there were three things. Like one was 25%, then there was no, how much was that for pension plan? First year, second year, first year, second year, third year, and onwards, there were three different criteria. Can anyone tell me?
5,000 first year and
5,000 for first and
I think we
year
can
it is.
only get credit of first 3 years.
Yes. First 3 years, it is 50% of the startup cost and maximum 5,000 per year you can get. So first 3 years, right now it's a fifth year, right? So can you get that deduction? No, right? For the
No.
fifth year you can't get, but for all the 3 years, how much you can take? 400 into 50%, 400 into 50%, right? And same for the first 3 years, you can take $200 as a deduction. Okay, but remember this thing, 200 into 3 comes to 600. Your actual expense is just 400. So in third year, again, you can't take. Only for 2 years you can take in like this, 200 and 200. It should not go more than the actual expense. Okay. Next is childcare facility in office employer has provided. Expense they have incurred is 20,000. So how much was the percentage for childcare facility?
25%.
20,000 into 25%. Okay. So you'll have to remember all this percentage. Let me check whether there were any other conditions. %25 of the qualified childcare facility expense plus 10%. But right now they have not provided any other details. So we'll just directly take 25% of whatever amount they have provided. Okay, when there's nothing mentioned in the question, just take directly 25% of the expense which they have mentioned. Okay, so yeah, that are the examples of the questions which can be asked in the exam. But remember to just understand one thing, just remember all the limits and the criterias for those for whom I have marked as AA, right? Most important topics. Okay. So any other question, guys, from your side? Tomorrow, I'll just quickly tell you tomorrow what topic we are going to take. Tomorrow we'll complete Affordable Cares Act. That is one topic which is pending from business taxation. And then we are going to start with the business properties, which is most important topic. If you check the weightage, business properties is the important. Then we have corporation and partnership. These three are the most important topics in the part 2. So tomorrow we'll complete with Affordable Cares Act and start with the business property topic. Okay, so don't skip tomorrow's session, and please tell your friends or colleagues who are attending the session and that don't miss tomorrow's session. Okay. So any question from you guys?
No, nothing.
Okay. So that's it for the day. We'll meet tomorrow at same time, 8 a.m. Okay, and tomorrow's session maybe for 2.5 hours. All right.
Okay.
So bye, guys.
Bye bye.